Welcome back to the Wealth and Wellness Club. I'm Chrissy Reilly, and this is Jennifer Polich, and we are real estate agents here in Huntington Beach, California.
Today we have a really special guest speaker, Susan Burns. She is a 1031 exchange officer with JLM Corp, and she is going to share all the ins and outs of the 1031 exchange process with us today.
Yes, we are so excited to have you here with us today, Susan, so take it away.
Well, thank you, ladies, for having me here today. For all those listening, my name is Susan Burns, and I'm the exchange officer at JLM Corporation 1031 Exchange. We are a wholly owned subsidiary of Orange Coast Title Company and have been successfully accommodating exchanges since 1988.
Wow. Awesome.
All my contact information is on the screen you see right now. Please feel free to use me as your 1031 Google. Give me a call, send me an email, give me your questions. I'd be happy to answer them. So let's start out with, what is a 1031 exchange? It was named after Section 1031 of the Internal Revenue Code, and it allows a qualified transaction to sell real property held for business, trade, or investment purposes to defer their capital gains by purchasing a like-kind property within the applicable timeframes. So why exchange? Your capital gains may be significant. Reinvestment into the replacement property allows the taxpayer to leverage dollars otherwise spent on taxes. So instead of paying the taxes, you can increase your investment amount. It also allows for non-income producing property to be replaced with income producing property. So if you find yourself in an area that is just not doing well in rental, you can sell that property and exchange it for a property that has a good rental market. It also allows the taxpayer to diversify their portfolio and minimize risk. So choosing your qualified intermediary, it's very important to do your homework when choosing someone to accommodate your exchange. What should the qualified intermediary be doing for you? They're going to guide you through each step of the exchange. Ensure you follow the regulations set forth by the IRS. Work with all your professional advisors, your CPA, your tax attorney. Remind you of the important deadlines in 1031 exchange. Answer your 1031 questions. Now, keep in mind, we can't give tax advice or answer tax questions, but we always can answer questions regarding 1031 rule. We simplify the process for the exchanger, and the most important thing we do is protect your funds until you're ready to purchase. So it's important to note that unlike escrow, title, and real estate agents, qualified intermediaries are not regulated. Anyone can become a qualified intermediary. So again, do your homework. Make sure you're handing your money over to someone who's going to protect it for you. So I have some good questions here to ask. How long has your company been accommodating 1031 exchange transactions? Where are the exchange funds held? Do you invest funds held for exchange? If they say yes, hang up the phone. You don't want anyone investing your exchange money. They could lose that money, and then you're going to be taxed on the money you lost, which would be very sad. And do they maintain fidelity coverage to ensure against employee theft, embezzlement, or misappropriation of exchange funds? What is the policy limit of your errors and omissions insurance coverage? It should cover your transaction. And will they provide copies of insurance binders and contact info for their insurance agent so that you can verify the coverage is still in force? This is very important. Anyone can get an exchange binder by just making one payment. You want to make sure that you call the agent and make sure that that policy is still in force when you go and enter your. So what are the requirements? Well, real property must be held for productive use in trade, business, or investment. The property purchased must be of equal or greater value as the property sold. The taxpayer that transfers relinquished property must acquire the replacement property. We call this the same name rule. There are some exceptions that we'll see in a little bit. And sale proceeds must be transferred directly to the QI or qualified intermediary to avoid actual constructive control of the funds. Any funds retained by the exchanger will be subject to tax. So let's go over a few exchange terms. So our relinquished property refers to the property we are selling. That is the first part of our transaction in a forward exchange. The replacement property is our purchase. Qualified intermediary, there are many names. 1031 accommodator, qualified intermediary, QI, or exchange officer are all terms for the person who will hold on to your money for you while you go through this transaction. And boot. Boot is a very funny term, not quite sure where it came from, but it is cash out of the transaction that is taxable. So this is to prepare for setting up the exchange. The exchanger will sign exchange documents on or before closing of the relinquished property. It is very important to note that the exchange must be set up prior to closing. Once the transaction has closed, there is no more opportunity to exchange. The qualified intermediary holds the funds until ready for reinvestment. And the taxpayer may not control the funds. That's why they go to the qualified intermediary. And the funds are held in a trust account for the exchanger's benefit. So LikeKind Property, it's a very vague term. It's very, very simple. LikeKind Property means real property. So you're going to sell a property and you're going to purchase another piece of property. It doesn't matter what type of property. You can sell vacant land and buy a house. You can sell a condo and buy vacant land. You can also buy a percentage of commercial property if you like. It just needs to be real property, has a parcel number, has a legal description. Now, we need to be very careful when we look at something like a mobile home. A mobile home can qualify for 1031 exchange if it is permanently affixed to the land and if you own the land. So in a mobile home park, it could still qualify, but you want to be very careful to learn the park rules. It could be that you have to be a primary resident to get the deed for your little parcel of land that your mobile home is affixed to. They may not allow you to have that if you consider it rental property, in which case you will have failed your exchange because you just bought personal property. So what is not LikeKind? We cannot use your primary residence in 1031 exchange. We cannot use a vacation home. And when I say vacation home, I don't mean Airbnb or VRBO that you're buying and you're going to rent out through that medium. I'm talking about a vacation home that only you, your family, or friends use. You don't use that as rental property. Also not included is a second home. So my apologies to those snowbirds that go to a second home in the winter. Unfortunately, that does not qualify for 1031 exchange either. Stocks, bonds, and partnerships as of 2018 have been removed as well. What are the time frames in 1031 exchange? The IRS is very firm on their timelines. The only time I have personally seen an exception, and there's probably been some in the past, but during COVID in April of 2020, the IRS issued an extension for 1031 exchange wherever our exchanger was in the process. They had 90 more days added. We are under no extensions at this time. So the time clock on your exchange starts the day the transfer deed records on the relinquished property. You have a total of 180 days to close on your any and all replacement properties. The first 45 of that 180 days are your identification period. You identify property for purchase, and it's put in writing, and you forward it to your accommodator. And after the 45 days has expired, there are no changes to that list of properties. So if you are unable to close on any of the properties listed, there is no changing properties after 45 days, and you will have failed your exchange. Now, there are no fines or penalties for entering exchange and not being able to complete it. You would be subject to the same capital gains you would have paid otherwise. So let's talk a little bit about the 45-day identification period. So your identified properties must be submitted in writing. There's actually a form that is provided that you would fill out. There are limits on the delivery. There has to be a date and time stamp. So you can either fax those in or send those in via email. And then there are 3 rules in identifying property. The first and most popular rule is our 3-property rule. You may list up to 3 properties regardless of value. You only have to purchase one of the properties listed. The 200% rule allows you to list more than 3 properties, provided you are not exceeding 200% of what you relinquished. So if you sold at $500,000, you could list $1 million worth of property, however many properties that will get you. And then the 95% rule allows you to list as many properties as you like. However, you're responsible for purchasing 95% of the value of what you've listed. So you want to be very careful that that doesn't cause a financial burden to you. So the 180-day exchange period, as we said before, you must close on any and all escrows prior to the 180-day deadline. It's important, even though you have until the 180th day, it's important to try and get everything closed up and give yourself a little bit of cushion. We have had exchangers fail because they waited until the very last day and something unforeseen happened. One was we had a wire platform go down and we couldn't wire money out that day. Therefore, they couldn't record that day. The exchanger failed their exchange because they closed on their escrow on the 181st day.
Wow.
So always leave yourself a cushion. So the financial requirements to be totally tax deferred, the exchange must be of equal or greater in value, equal or greater in equity, must invest all net proceeds into the exchange. And it's interesting, in 1031 exchange, the IRS does not allow for debt relief. So you're not just reinvesting the proceeds that you get from the sale. If you have debt on that property, you have to replace that debt value as well. Now, you don't have to carry equal debt if you don't want to. If you have the means to just reinvest in cash, you absolutely can. So back at the beginning, we talked about the same taxpayer requirement, or what I called the same name rule. So the taxpayer who relinquishes property must acquire the replacement property. We cannot drop a taxpayer. So if you own it as husband and wife and you decide, oh, I don't want to be on title on this one, we have to have you take it both your names. The only exceptions are a disregarded single member LLC as the sole member or a living trust. Traditional lenders don't like lending to a trust or won't lend to a trust. They also won't lend to a single member LLC. So they have to take the loan in their individual names. This is absolutely allowed. What will happen is we'll close the transaction in their names, and then they can deed the property back into their LLC or their trust at a later date. And if a taxpayer should pass away during the exchange, his estate or trustee may complete the exchange. Related party exchanges. So who's a related party? Anybody that's related to you. So if you purchase or sell to a related party, there is a 2-year hold before you can transfer title again or 1031 again. Selling to a related party or buying from a related party is scrutinized by the IRS because people have just said, oh my gosh, I can't find an investment. My brother has one. I'll just buy my brother's property. And it's not really a true transaction. Now, there are legitimate related party transactions. I see them all the time. My recommendation, if you're doing a related party exchange, make sure it's very, very clean. You sold it for market value, and there's nothing that the IRS can pick apart, because the last thing you want is an audit. They are not fun.
Such amazing information. All these things that I have a lot of questions for you, but we were trying not to interrupt you in the middle with all the questions, but I could have asked a question on every slide, I think. But just I have a couple. We have a couple that we just wanted to ask really quick. If I own a property, if I'm selling a property for $1 million and I can't find a replacement of equal value that is exactly 1 million, I can only find something that's, let's say, 700,000. Can I still do the exchange?
Absolutely. That does not invalidate the exchange. So whatever money you reinvest, the 700,000 into a new property is tax deferred. You will pay taxes on the 300,000 and consult your tax advisor just to see what that liability looks like for you.
Okay, so now back in one of your earlier slides when we talked about terms, is that 300,000 called the boot?
That 300,000 is called the boot.
Yeah.
Very
right.
good.
So it's the money that will be taxed.
Yes.
From the transaction.
Yeah.
Also, Susan, I had a question on if I were to relinquish a property, am I required to obtain one single property, or can I purchase more than one property to, facilitate that exchange?
That is no issue whatsoever. Say you sell at $1 million and you find 2 properties for 500,000. You can actually exchange into however many properties you like. It's important to note, though, that there probably will be additional fees for each additional past that first property that you exchange into. You can also sell 2 properties, 3 properties, and purchase 1 large property if you like.
Fantastic. And how about out of state? If I own a property in California, can I exchange into another state?
Just make sure, absolutely you can. Just make sure the accommodator that you are using can also accommodate in other states. In the case of JLM, we work in all 50 states.
Awesome.
Yeah, we love JLM. You guys are just great. And Susan, thank you so much. How should people get a hold of you?
They can give me a call with their particular transaction. If they have questions on a particular transaction, I'd be happy to help. They can give me a call with any 1031 exchange questions, or as you can see my email down there too, you can go ahead and email me your questions and I will get you your answers.
Wow, Susan, thank you so much for sharing such invaluable information on what can oftentimes be such a complex process, right?
So for any of our viewers, if you are interested in doing a 1031 exchange, contact us and we will walk you through the process.
Absolutely. And if you have any comments or questions, definitely put them below. Like the video and be sure to share our video with your friends and family and other investors as well. So stay tuned for our future episodes on the Wealth and Wellness Club. Thank you so much.
See you soon.
Bye.